frame the questions.
We are a bit early, but I don't know if your channels have already started playing. They would. Oh, you haven't started the telecast. Achha, so you start at 12 exactly. So what is the House vote on the monetary policy?
As expected.
As expected. Okay. What you were told, meaning?
So what the people on the channel said, it is unexpected.
Okay.
But the people were expecting that he will fall now. Yeah, but
Okay, I think let's get going. Good morning, and you have already heard the questions. You have already heard my statement, so I would request our media head, Yogesh Dayal, to take over.
To this post-policy press conference. This is the last for the year, and we'll be today interacting with media friends who have come from all media agencies, all media houses been represented. So first of all, I'll welcome the Governor and the Deputy Governors, Shri M.K. Jain, Dr. Michael D. Patra, Shri M. Rajeshwar Rao, Shri T. Ravi Shankar, Executive Directors Dr. O.P. Mal and Dr. Rajiv Ranjan, along with my colleague from MPD, Monish Kapoor, and the media friends. Welcome to this press conference. Before we go ahead, sir, I would request you to make some opening remarks so that we can get started with the press conference.
Thank you. You see, what I have done is that, as I have been doing in the previous Monetary Policy Committee press conferences, I have tried to summarize, the statement, the detailed statement which I made. I have tried to summarize them. And in this context, I would like to highlight 7 points. First, this basically emanates from whatever is there in the statement, but to just put things in the perspective, I would like to say as follows. The first point is that the Indian economy remains resilient. It has withstood successive global shocks over the last 3 years. Each shock came with unprecedented suddenness and spillovers. Major economies are still reeling under their pressure. However, Indian economy, amidst all this, remains resilient. The second point is that inflation has shown signs of moderation. I repeat, inflation has shown signs of moderation, and the worst is behind us. But there are concerns around core inflation. We cannot take our eyes off inflation. Third, we are now witnessing conducive conditions of macroeconomic stability as reflected in moderation in inflation, fiscal consolidation, and the expectation that the current account deficit is likely to narrow in the coming quarters. Fourth, the Indian rupee has remained one of the least volatile currencies among its Asian peers in 2022 and continues to be so this year also. Fifth, the real policy rate has moved into positive territory and the banking system has exited from the Chakravyuh of excess liquidity without causing any disruption. Monetary policy transmission is also picking up. Sixth, on liquidity, the Reserve Bank will remain flexible and responsive to the requirements of the productive sectors of the economy. And seventh and the final point is that we in the Reserve Bank of India stand resolute to deal with all future challenges. I'll stop here. Thank you.
Thank you, sir, for those opening remarks. I will start the press conference by, I'll invite Mr. Govardhan Rangan from Economic Times to ask his question.
Thank you, Yogesh. So good morning, Governor. With this policy, probably you're not surprised, you just met the expectations. But in terms of the future outlook, your inflation forecast for next year is 5.3 and the Q4 of next year is at 5.6. if one looks at when there is a consensus among all the central bankers that inflationary pressures is easing, you also mentioned, but what is the reason for forecasting at 5.6%, which is higher than what the MPR so forecast in the last edition? So why is there, what is that has made you increase the forecast for next year fourth quarter? And what is the message with the two of the MPC members already saying that we have done enough? So how does one read this in terms of messaging as to what is that in store?
Okay, I would request Deputy Governor Michael Patra to take that question.
Yeah, as you mentioned, the average inflation is actually lower in 23-24 than in 22-23. And you specifically mentioned the second half of the year. That is because of the base effects of this year playing out into there. That's why the higher inflation.
In terms of the widening difference within the MPCs, when the external members are saying that, okay, you've done enough and the inflation is easing. So why is that, still there is kind of an indication that there may still be rate hikes and, okay, not a pause?
No, ultimately the MPC decision is the majority decision. And with regard to indication, it's not possible to, say anything. I have said it earlier also that in the current tightening cycle especially with regard to rates, we have refrained from giving any forward guidance because sometimes it can be, and quite likely sometimes, it may become counterproductive. So we are not giving any forward guidance. We have said that we will be extremely watchful of the incoming data as well as the outlook on inflation as well as what is happening in the overall economy. Based on that, we will decide going into the future months.
Thank you, sirs. I'll invite Thank you, sirs. I'll invite Mr. Anand Adhikari from Business Today to ask his question.
Good afternoon, sir. Sir, I have done some analysis of, those three food items. I was looking at the CPI, basket, and I have seen cereals, eggs, and spices. Consistent.
Cereals?
Eggs and spices. So they have been a consistent rise since May, month on month. Cereals and, spices, I think not even a single month that has gone down. In case of eggs, they are, prices are high, but in the last 2 months, we have seen at least 5%, rise in the last 2 months. I just want to know, what is your assessment of these three items, in the food basket, and will they remain sticky?
You see, each component of the food inflation, or let me put it this way, each component of the headline inflation, and beyond that, each component of the food inflation, the core inflation and the fuel inflation, each of the components, the momentum, that is the month-on-month momentum, are very closely examined by the MPC and by our research teams within the RBI. And based on that, we give out certain statements. Like, for example, I have said that the moderation in vegetable prices in the last 2 months, that is in November and December, they more than offset the price momentum in cereals, and I have mentioned 1 or 2 items there. So we are examining all these components, and the future trajectory of each of these components, the month-on-month momentum, it's all built into our projections.
Thank you.
Thank you, sir. I'll invite Mr. Vishwanath Nair from BQ Prime to ask his question.
Good afternoon, Governor. In your statement, you mentioned that banks have come out of this Chakravyuh of excess liquidity. You're also pointing out that the deposit rates are rising between May and December. You pointed to 13 basis points on weighted average term deposit, fresh deposits. Having said that, since the last policy, the gap between the credit and deposit growth has reduced, but it still remains quite wide. As the prospects for credit growth are rising sharply still, how long can banks continue having this 400-500 basis point gap between the credit and deposit growth rates?
You would like to take that, or Jain will take that? I think I would request DG Michael Patra to take that question, and DG Jain can supplement thereafter.
Yeah, as you point out, the difference has narrowed, but there is still a difference, and it's really up to the banks to mobilize deposits and make up the gap. They are doing so through certificates of deposit and reducing their non-SLR investments, but they need to mobilize deposits on their own to meet the gap.
Thank you, sirs. I'll invite...
Just a moment. I
sir.
would request DG Jain to supplement.
Okay, I will supplement what Dr. Patra has talked about it. There is an increase in the deposit side also. The sources of funding we have analyzed, and we have seen that the sources of funding are coming from deposit as well as the borrowings. The CD ratio as of now for the banking sector has increased little bit, but still reasonable within the range. And the liquidity coverage ratio is still at very comfortable level, much higher than the regulatory prescription of 100%.
Thank you, sirs. I'll invite Ms. Lata Venkatesh from CNBC TV 18 to ask her question.
Thank you, Yogesh. Governor, 2-3 questions, please. So this
It will
real
be good
policy
if you
rate...
can ask one, because
The real policy rate, you said that, now 5.6 inflation and 6.5% repo rate. But the 1-year T-bill is trading at 6.95. So effectively, if you take 5.6% inflation, the real rate is already about 140 basis points, 130 basis points. Will you be guided only by the pre-COVID, which was, I think, 230 basis points difference, real positive rate? So what will guide your decision to pause? Or will it be also actions of other central banks? And if I may, so what is the total exposure of the banking and the NBFCs to the Adani Group? Because we just heard that REC has 7,000 crores. So is there a number that you all have already assessed? And if you can tell us whether you would be cautious that that number shouldn't increase.
okay. And now the first part of the question, relating to that real rates and all, Dr. Patra can take, then I will take over the next question. I mean, the next part of the question.
So as you point out, we have nudged
Put the mic on. Yeah.
we have nudged the real policy rate into positive territory. What its level will be decided by the evolving macroeconomic configuration. So it's not necessarily guided by pre-pandemic levels or anything, but by the evolving growth and inflation trajectory.
130 is big, no real rate.
No, actually, we're talking about the real policy rate, right? So you take the policy rate and adjust it for 4 quarters ahead inflation, as we've always done, and you get less than 1%. You get 0.9. Okay. And about foreign banks and all that, we take into account all developments in the world, but monetary policy has an exclusive domestic orientation, and it will react to domestic developments.
Now, with regard to the other part of the question about the exposure of the banking sector to the to one particular business conglomerate, we have issued a press release on last Friday. I have nothing more to add to that. Individual cases and their numbers, as you are aware, we do not discuss in the public domain. Having said that, let me mention in addition, because so many questions are being raised in the public domain, in the last 3 to 4 years, the Reserve Bank has taken a number of steps to strengthen the resilience of Indian banks. We have come out with clear guidelines to regulate the governance in Indian banks. We have issued guidelines about the functioning of the audit committees. We have issued guidelines for the functioning of the risk management committees. We have now made it mandatory for appointment of chief risk officer in banks. We have also made it mandatory for appointment of chief compliance officers of the banks, and we have given through our regulations the desired level of autonomy to the chief risk officer and the chief compliance officer with regard to his functioning within the bank. The chief risk officer, for example, reports directly to the audit committee. And there are so many other regulations which I am not going into. We have also rationalized in the last 2 years the large exposure norms. And all that I would like to add at this point of time, that the Indian banking sector, including the the NBFC sector, since you referred to a couple of them, the Indian banking sector and the NBFC sector continue to be resilient and strong. Thank you.
Thank you, sir. I'll move on to Mr. Anup Roy from Bloomberg. Request him to ask his question.
Thank you, sir. Sir, a couple of countries in the Southeast Asia region, they are now warning about inflation and the resurgence of inflation. And you are also seeing inflation to be sticky, the core inflation to be sticky. So what is your, do you fear a resurgence of inflation back, sir?
No, we have given our roadmap, we have given our projections, our estimated, our projections we have given out now for 23, 24. And we have factored, we have also highlighted all the upsides and all the downsides. And beyond that, it is not possible for me to, say anything else. And as regards the level of inflation in other countries, that does not impact our decision making. Our decision making will be governed by the domestic factors. And also one more point that has to be kept in mind. See the gap between the inflation target in many, in several countries and where their current inflation is. The gap is much wider compared to our target and where our inflation is.
Sir, if I may ask one more question. So today, you have, hiked by 25 basis points, and a lot of analysts were thinking that you will give a clear tone that we are going to pause, but you are in no mood. So clearly, inflation is very much there in your mind. So, will you ever give an indication that we will pause here?
Currently, our mood is a mood of optimism.
I'll move on to Ms. Anshika Kayast from Hindu Business Line. So that's it.
Please press the mic.
Yeah.
Yeah.
Yeah. So you mentioned that you'll be issuing directions on penal charges for financial institutions. Just wanted to understand what has been so what prompted this and what has the RBI observed so far? And second, just quick question, what is the sort of preparedness level? I know you've started getting feedback on the ECL draft framework. What has been the sort of feedback and comments so far, and by when could we expect the final guidelines? And what is the general preparedness level of banks as of now, according to you?
Okay, I would request Deputy Governor Rajeshwar Rao to take that question, both the questions.
Thank you. Now, regarding the first issue of penal charges, basically the supervisory reviews which have been conducted by RBI, they have revealed that most banks use penal rate on top of the normal interest rate in case of payment defaults and non-compliance with the terms and conditions of the credit facility, sanctioning the credit facilities. The reviews indicated there are diverging practices and there were excessive charges in some cases, so they were leading to grievance and disputes. So essentially what we are trying to do is we are trying to frame guidelines which will ensure that there will be kind of a transparent and uniform approach to this issue. So that is the background under which we gave we're proposing to issue guidelines on the penal charges. Now, as far as the ECL norms are concerned, I think I think the ECL norms, it's generally assumed that the ECL norms may be higher than what is there under the current approach, but that may not be necessarily the case in all the cases. So that is one point. And if you look at the position of the banks, the current position is that in terms of the financials, the banks are well prepared to absorb it. In fact, the PCR ratios have improved to about 71.5% in September 22 as compared to 68.1% last year. And the discussion paper has been placed in public domain. We are expecting the comments to come in by February end, and maybe shortly thereafter we will propose to issue the final guidelines, taking into account the feedback being received from the public. Thank you.
Thank you, sir. I'll move on to Mr. Ajay Ramanathan from Financial Express.
Good afternoon. Governor, this is regarding the National Financial Information Registry. Now, it was announced in the budget and we believe that a draft is ready. So I just want to know how this will differ from the credit information bureaus that we already have.
I think DG Rajeshwar Rao can take that question, and if you want to supplement. Okay.
There have been consultations between RBI and the government on this NFIR bill 2023. Further course of action will depend on once the bill is passed. And as far as the NFIR's role is concerned, I think we expect it will contain ancillary information over and above what is already being held by the credit information companies.
which will be, part of this new registry that we are envisaging, and it's under discussion with the government. I mean, a lot of discussion has already happened, based on which the government has announced it in the budget.
Thank you, sir. I'll invite Ms. Chloe Cornish from the Financial Times to ask a question.
Thank you, Yogesh. International banks were key financiers of the Adani Group. Moody's and other agencies have said that the Indian banking system is not badly exposed to the Adani Group, unless they start to become major lenders to the group, which may become less able to avail financing from international lenders. Fitch actually said there is a tail risk that fallout from the controversy could broaden and influence India's sovereign rating. Will you be giving any guidance to domestic banks about their exposure to the Adani Group going forward?
You see, I think I have replied whatever I wanted to say. We have made our own assessment. I mean, other agencies make their own assessments. The Reserve Bank, in the Reserve Bank, we have made our own assessments. And I have said whatever I just said a little while ago and whatever we said in the press note based on our assessment. The large exposure guidelines prescribed by the RBI are fully complied with by all the banks. And so far as the, Indian banking system now, the total, the strength, the size and the resilience of the Indian banking system is now much larger and much stronger to be affected by, an individual incident or a case like this. The banking system is strong, and also you saw I think this whole perception is coming because of the market capitalization of the shares of the group. When banks lend money to a company or to a group of companies, the banks do not lend on the basis of market capitalization of that particular company. The banks lend on the basis of the strength of their company, the fundamentals of their company, or the strength and the fundamentals of their analysis if it's a greenfield project, the anticipated cash flows, and so many other things go into the appraisal of the banks. And the appraisal methods of Indian banks have significantly improved over the years. So I think I would just reiterate again that the banking system is stable, continues to be strong. DG Jain, would you like to add anything?
Governor has already explained that our domestic bank's exposure is against the underlying assets, the operating cash flows, and the projects under implementation, and not based on the market cap. The exposure as of now is not very significant across all the banks and the NBFCs as well. The exposure against shares of the domestic banks is insignificant. Thank you.
Thank you, sirs. I'll move on to Mr. Ben Josh from the Press Trust of India, PTI.
Hi, Governor. Is 6.4% is an achievable target given the external risk?
Given the
external risk, is it an achievable target? Last time you lowered the target many times, or are you in a comfortable position to repeat the same? Even the nominal GDP growth is good. The budget has expected 10%, down from 15.5% this year.
You see, last year we had initially given 7.8%, if I recall correctly. Then, of course, the war started in Europe and so many other developments took place. But I think I'll leave it to Dr. Patra to take that question.
So if I just add, that first quarter you'll have up from 7.1 to 7.8. Why?
So first of all, on your question, we recognize that the global situation may result in net exports becoming a drag on our growth. And therefore, if you see 2023-24 relative to 2023, there is a deceleration from 7% to 6.4%. That actually factors in a drag from net exports. As of now, given current projections of world trade, world output by international agencies which are factored in here, it is achievable. Yeah, and these are year-on-year forecasts, so they have a momentum and a base effect. Some of it is coming from the base, that is 22-23.
No, I think that discussion can continue after the press conference. Sorry about that, but yeah.
Thank you, sir. I'll invite Gopika Gopakumar from the Mint to ask a question.
Thank you, Yogesh, sir. Sir, this is with respect to liquidity. You've said that the liquidity remains surplus, although it's lower compared to last year. Now, and you are looking at different liquidity operations on both sides of the lap. Where would you want to see the liquidity? Is there some level now you're looking at before it starts normalizing?
You see, in beginning of this financial year, I think the liquidity was about 7 to 8 lakh crores in April 22. Now the daily, average daily LAF, I have given out the number, I think it is 1,60,000 crore, 1.6 lakh crore, I have mentioned it in the statement. And during this period also on, I think, couple of occasions, on 2 occasions, we undertook variable rate repo operations for, very short periods when there was a little bit of a stress in the liquidity situation. Our effort, and as my colleague Deputy Governor M.K. Jain pointed out, the LCR, the liquidity coverage ratio of the banks is much more than, I would not say much more.
And as far as the NFIR's role is concerned, I think we expect it will contain ancillary information over and above what is already being held by the credit information companies.
There will be a lot of additional information, which will be, part of this new registry that we are envisaging, and it's under discussion with the government. I mean, a lot of discussion has already happened, based on which the government has announced it in the budget.
Thank you, sir. I'll invite Ms. Chloe Cornish from the Financial Times to ask a question.
Thank you, Yogesh. International banks were key financiers of the Adani Group. Moody's and other agencies have said that the Indian banking system is not badly.
On the evolving situation, it's difficult for me to, pinpoint and give out a number. It will depend on the evolving situation and, the credit offtake, the needs of the economy. But we have given a statement that we will, we will sort of keep in mind, we will be responsive to the needs of the productive sectors of the economy so far as liquidity is concerned. Under that broad principle, we will act.